Hey everyone, welcome back to Corporate Decoder, the place where we translate all the corporate jargon into plain English. And let me tell you, this Heartland filing from June 2025 is a bit of a mixed bag, almost like a value investor trying to pick a winner in a tech rally. This is the filing where Heartland Group Inc. tells us how their mutual funds have been doing. We're going to dive into the numbers to see if their value investing strategy is paying off or if they're stuck in the past. Also, if you appreciate getting straight insights from these dense SEC filings, make sure you're subscribed, and we also have a Discord community linked in the description below. First up, let's look at the Heartland Mid-Cap Value Fund, specifically the institutional class. They're telling us about their performance from January 1, 2025 to June 30, 2025. They mentioned that during this 6-month period, the fund actually lagged behind the Russell Mid-Cap Value Index. They blamed this on not having enough exposure to high-growth stocks, especially in sectors like technology, industrials, and consumer discretionary. Apparently, companies involved with artificial intelligence were a big miss for them. Now let's dig into the longer-term picture with a look at their 10-year performance. If you'd invested $500,000 in 2015, by June 2025, your investment would have grown to $193.8068. That's a decent return, but let's compare it to the benchmarks. The Russell 3000 index would have turned that same $500,000 into a massive $1,000, into a massive $1,000, into a massive $500,000, into a massive $500,000, into a massive $1,000, in 21,116.91. Compare it to the benchmarks. The Russell 3000 index would have turned that same $500,000 into a massive $1,000, into a massive $1,000 into a massive one-chap value index would have resulted in $1,119,038. That's a decent return, but let's compare it to Lovenitz would have resulted in $1,119,352. So while they've managed to grow your money, they haven't kept pace with the broader market or their specific value index over the long haul. Looking at the average annual returns over the last 10 years, the Heartland Mid-Cap Value Fund institutional class had a return of 9.09%. The Russell 3000 index, on the other hand, achieved 12.96%, and the Russell Mid-Cap Value Index returned 8.39%. This shows them performing just above their specific value index, but significantly below the broader market. The fund holds about $556 million in total net assets, with 59 holdings and a portfolio turnover rate of 44%. That turnover rate suggests they're not aggressively trading, but not entirely static either. Let's see where they're putting their money. The top holding is Teledyne Technologies Inc. at 4.6% of net assets. Then we have Public Storage at 4.0%, Centene Corp at 3.3%, and Hershey Co at 3.1%. The rest are all around the 2.6% to 3.0% range. These are mostly well-established companies fitting their value investing theme. In terms of sectors, industrials make up the largest chunk at 19.9%, followed by healthcare at 12.2%, consumer discretionary at 12.1%, and financials at 11.3%. Information technology is at 11.1%, which is interesting given their commentary about missing out on tech gains. They have very little in utilities and materials and only 0.9% in cash. Next, let's switch gears to the Heartland Value Fund, also the institutional class. For this fund, they reported outperforming the Russell 2000 Value Index during the 6-month period. They attribute this success to strong security selection, particularly in energy, consumer discretionary, and financials, highlighting the value of active management. They emphasize that unlike index funds, they can focus on profitable, fundamentally sound businesses. Now for the 10-year performance comparison, if you invested $500,000 in this fund back in 2015, by June 2025, it would have grown to $1,032,727.690 index, which would have turned it into 1,103, and the Russell 2000 index, which would have turned it into 1,103, and the Russell 2000 index $7,900. And the Russell 2000 value index over this period, but still lags the much broader Russell 3000. Looking at the average annual total returns, the Heartland Value Fund institutional class had a 10-year return of 7.52%. The Russell 3000 index returned 12.96%, and the Russell 2000 value index returned 6.72%. This fund is outperforming its specific index, but still significantly underperforming the broader market. This fund is larger, with about $783 million in assets, 94 holdings, and a much lower portfolio turnover rate of 19%. This suggests a more buy and hold approach. For their top holdings, Lincoln Educational Services Corp leads at 3.8%. Then we have Texas Capital Bancshares Inc. at 28% and Varsity Bank Group Inc. at 2.5%. The rest of the top 10 are around 1.9% to 2.4%. Again, these are generally value-oriented companies. Sector-wise, financials dominate this fund at 24 to 9%, followed by industrials at 17.4%, consumer discretionary at 12.44%, and materials at 8.1%. They have a healthy allocation in information technology at 7.7%. Finally, let's check out the Heartland Value Plus Fund institutional class. This fund actually lagged the Russell 2000 Value Index in the 6-month period. They cite stock picking as the main reason, with negative impacts in information technology, consumer discretionary, consumer staples and materials. They've been focusing on companies with self-help strategies for margin improvement and share buybacks. Now for the 10-year performance, if you invested $500,000 in this fund in 25, it would have shrunken to $849 at $49,690 index into 98. This is a significant loss compared to the benchmarks. The Russell 3000 would have turned your $500,000 into $1,000, and others into $100 and $8, everyone to be dollars, and the Russell 3000 would have turned your $500,000 into $1,000, $103,000 into $1,015.90, $1,011.30, and the Russell 2000 body index into $90,57,900. Ouch. The 10-year average annual return for this fund is a disappointing 5.45%. Compare that to the Russell 3000's 12.96% and the Russell 2000 value's 6.72%. This fund has seriously underperformed both benchmarks over the last decade. This fund has about $268 million in assets with 53 holdings and a turnover rate of 29%. Here, Stifel Financial Corp is the top holding at 3.9%, followed closely by Seacoast Banking Corp of Florida and FB Financial Corp, both at 3.8% and 3.9% respectively. OnVista Holdings Corp and Gates Industrial Corp PLC are also in the mix. The sector breakdown is heavily tilted towards financials at 31.8%, followed by industrials at 16.8%, real estate at 9.9%, and information technology at 9.7%. Let's quickly touch on the performance figures from the Statement of Operations for the 6 months ending June 30, 2025. For the Mid-Cap Value Fund, they reported a net investment income of over $4 million with net realized and unrealized gains of about $2 million. Net realized and unrealized gains of about $2 million for a net increase of over $. This clearly shows the struggles of the Value Plus Fund. Digging into the footnotes, we find some important details. The definition of level 1, 2, and 3 inputs for fair value measurements is standard. Interestingly, for all three funds, they reported 0 level 3 investments, meaning all their holdings are valued based on readily available market prices or observable inputs, which is generally a good sign for transparency. It's also notable that only the Mid-Cap Value Fund participated in securities lending during this period, with no securities on loan as of the end of June 2025. This program generated a small amount of income, but it's not a major part of their operations. And the report is signed off by William R. Naskovitz, who looks to be around 80 years old, serving as President and CEO, and Nicole J. Best as Treasurer and Principal Accounting Officer. Their commitment to fundamental research and value investing principles is clearly stated. Now, looking at these results more broadly, Heartland's strategy of focusing on value seems to have hit some turbulence, particularly with the Value Plus Fund delivering truly poor returns over the last decade and even over the short term. While the Mid-Cap Value Fund is doing okay relative to specific index, it's still trailing the broader market by a significant margin over the long term. The Value Fund is performing better, outperforming its index. The inconsistency across their funds suggests that maybe their value approach isn't as robust as they claim, especially in a market that has rewarded growth and tech companies. The biggest risk here is the underperformance, particularly of the Value Plus Fund. Investors in that fund are not seeing their money grow effectively, which is the primary goal of investing. The fact that they're still sticking so rigidly to their value principles, even when it means missing out on significant market gains in growth sectors, might be their biggest weakness. In conclusion, while the mid-cap value and value funds are showing some resilience. The Value Plus fund is a clear underperformer. Heartland Advisors needs to show tangible improvements, especially in that fund, or investors might look elsewhere for better performing value strategies. Alright, that's our breakdown of Heartland's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.